our forecast is for the moment that for the entire 2020, China will grow at 2%, and that is factoring previously 7% in Q1, which now is the real number is very close to our number. So for the next 3 quarters, we are expecting 2%, 4%, and 6.5% for the rest of the year. So which means that China's the GDP growth rate might go back to the pre-virus level at earliest Q4 this year, rather than a V-shaped recovery or anything close to that.
How is it that in China people are buying big ticket items like investing in real estate? How is it that there's pent-up demand for that, but we are seeing a lag with the retail data?
Yeah, I think that people are willing to get out to buy property because they might have missed the property purchase in the first 2 months of this year. And then, as you mentioned, it's only tier 1 and tier 2 cities. And then if we look at the entire China, for the tier 3 and tier 4 cities, especially, the housing sales has not been as strong as people think. So overall, housing sales still declining. And as well, that the households, even though they are willing to get out and buy a property, buy a housing, but their daily consumption, especially tourism sales, actually the banquet for weddings, and then all those banquets have been declining very dramatically. So therefore, there has been some type of discrepancy between the car sales and property sales with the normal daily life consumption behavior.
Bo, I also want to get your thoughts on some of the unemployment data that came out as well, with China saying the March nationwide survey-based jobless rate is at 5.9%. The rate in 31 major cities, they're saying, is at 5.7%. What does this tell us about what we can expect from the consumer? And do you think this picture could worsen?
I expect this picture to worsen. Some of the improvement in the unemployment rate in China is simply because after the lockdown and migrant workers have gone to the factory and restart working. And this obviously does not reflect the actual job situation in China. And we are talking about some massive cancellation on the ground from the export sectors beginning in mid-March. And we do expect further deterioration of the job market in China in the manufacturing sector. So overall, the services is declining in terms of job creation. Manufacturing is actually laying off workers and will lay off more. So overall, we are actually going to see an unprecedented unemployment situation in China, which is quite similar to what happened to the US and Europe compared to the historical standard.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.